All right, so I just sat down this morning and I pulled up Thinkorswim and I noticed something very interesting. The short interest has changed on the $20 strike calls that Roaring Kitty is holding. 120,000 contracts was his position, but now the open interest is less than 120,000, which pretty much confirms that he did sell some yesterday. This was a big topic of conversation going into the close yesterday because we were seeing all of this volume on those $20 strike calls. The question now, though, is what did he do with the position? Did he just sell it? Did he cash out? Did he move the position? And let's just go back and kind of quickly refer to my slides here from the other day. Because in this presentation, I talked about the fact that he had acquired a $68 million, something like that, position on the $20 strike calls that expire on June 21st, which is a week from tomorrow. Now, putting $68 million on a short duration option contract shows a lot of confidence. And so this was kind of funny. This is a tweet that someone posted. He said, "I believe in Ryan Cohen, even though he hasn't told us almost any plan in 3 years. I believe in him long term. I believe he has a plan. I like the stock. All in options expiring in 2 weeks." Okay, so this, it just to me is like, I don't understand. But here we have something happening today. So we've got the annual meeting today at 10 a.m. Central Time, Central Daylight Time. All right, so it's Central Daylight Time, 10 a.m. I'm going to be definitely tuning in for this. And it'll be exciting what we hear, because what we hear in this shareholders meeting will hopefully align with some of what I talked about for possible 2024 thesis, the possible sort of transition, right? The thought at this point is that the company has sold 120 million shares on the open market. They've raised $3 billion on top of the billion they already had in cash. They've got at least $4 billion in cash, which I was listening to Jim Cramer last night on CNBC, and you got to take everything he says with a grain of salt. But he was saying with that amount of cash, they would have enough money to close up every store they have, pay off the leases, close up every location they have, and start over, brand new business model, and still have $2 billion left. Now, I didn't run those numbers myself. That's what he said, but that is an interesting proposition, because their current business model is, as we know, it's a legacy business model, brick and mortar, and it's been losing money. It's down 29% in gross sales year over year. Gross margin is declining. Free cash flow, well, they're losing money. So based right now, the thesis from 2020 doesn't really apply, it feels like, anymore. Right? The thesis that Roaring Kitty had in 2020, he said, it was based on 3 points. The first was that risk to digitalization is overblown. It's 4 years later, digitalization it's been slow, but it's coming. Number 2, he said sentiment is overly bearish. Short interest at that time was 100%. That's not true today. Now, I'll caveat that we don't know the true short interest because of naked short selling and because of the equity swaps. So there may be synthetic higher short interest and there may be naked short interest that we're not aware of. But I don't think you could say the sentiment is overly bearish, because what we know is that when Roaring Kitty took his first position on GameStop back in 2020, he bought it $4 a share. $4 a share. Okay, the current price is $25 a share. And there was a 4-to-1 split. So that means the current price is actually $80 if you took out the split. Okay, so $80 is definitely not value overlooked compared to 4, unless you just really, really believe that Ryan Cohen is going to turn this into an incredibly profitable company with all of the cash that he has on hand. And they could continue. They don't have to close up all of the stores. I mean, they could continue to run them. They're running at a little bit of a loss right now, but it's not that bad. They're not bleeding money. So they could continue to run all those stores. They could use the $4 billion and invest, turn GameStop into a holding company. There's a lot of things that they could do, which could work potentially really well to produce some free cash flow and start to transition the business in that way. So this is where the shareholder meeting today is a catalyst, potentially. I mean, it could be a miss. It could be a sell the news type of event, but it could be a catalyst. So now let's think for a second about these options. So Roaring Kitty, if we go back and we look at his position, what we know is that he acquired a massive stake. This was posted on Sunday, June 2nd. He had 5 million shares plus 120,000 calls. Now, remember, when you do an option contract, one contract is the equivalent of controlling 100 shares. All right, so 120,000 contracts is the equivalent of 12 million shares. So he has 12 million shares in options, plus he's got 5 million shares outright. So this is his combined position. Now, the thing that was making everyone kind of scratch their heads was like the short duration, the fact that they expire. Well, at that time it was in 3 weeks, but now it's in a week and 1 day. So as we know, the price skyrocketed after his announcement that he was in, and his position came up to $586 million, the total value in his account. When the price hit $67.50, he would have been unrealized $936 million, approximately. Now, options don't price in the after hours, so this is an estimate of what they would have been worth, but nonetheless, the price came back down. Why? Because Ryan Cohen ruined everything. At least that's how probably Roaring Kitty felt, and definitely retail traders felt, because the GameStop released earnings last Friday morning. Earnings were a miss, down 29% year over year, and they also announced a 75 million share offering, which is a huge offering. So Roaring Kitty's position declines. He's actually goes red for a period of time against his break even on the options. The stock he's always been in the green on. And so now we've got these option contracts, which in my last screenshot here, let's zoom in on this. We show this is the $20 strike right here, and you'll see 166,000 contracts of open interest. 166,000. Now we know that Roaring Kitty himself is 120,000 of the 160, roughly, right? So he's 75% of all of the liquidity and volume in that contract, which is why I said it's going to be hard for him to sell, because in order to sell, he's going to have to find a counterparty that wants to buy his option contracts. And given that the expiration is coming up, I'm not sure that he would be able to find a buyer for all of that. Of course, he was able to find someone willing to sell him those calls, and maybe it was a hedge fund. People are speculating at which fund it might have been, which firm, a big options firm. But someone sold him those calls and was willing to take the bet on that side. But whether or not they're willing to buy him back, it was, to me, in doubt. So I basically laid out 4 possible scenarios for this huge $68 million options position. Scenario number 1 is to exercise the option contract. So if you exercise the option contract, then you would be assigning the shares. So he would turn the 120,000 calls into 12 million shares. So that would be exercising. Now, for what it's worth, you don't have to do all of them. You could just do partial. So exercising and turning it into 12 million shares. The problem with this theory is that it would require the ability to buy 12 million shares times the strike price. What was the strike price? $20, right? So times 20, that's $240 million. What we know from his position that he posted is that he has $29 million of cash in the account. So $29 million of cash, he could buy 1 million shares at $20, right? For 20 million. He could buy 1.4 million, something like that, 1.5 million shares. But he can't buy 12 million. Now, what he could do is he could exercise 1.5 million, and then he could sell those shares on the market, raise some money, then exercise some more, and kind of do that cycle. But when you exercise a contract, it will, at least for me, when I've done it at expiration, the shares are there the next day. So I don't use E-Trade, so I don't know how quickly he can exercise and see the shares in his account, but I think it might be next day. So he has basically a week to slowly kind of unwind this. So one option is to exercise the contract, either, by somehow getting $240 million into his account, maybe a loan or something, I don't know. Remember, GameStop is not marginable. So this is GameStop here. I'll move this out of the way. I haven't taken any trades yet today. So this is GameStop here. It's easy to borrow, but it's 100% short interest. So, sorry, 100% marginable, 100% cash. Sorry, excuse me. It's cash only, which means you can't use leverage. So you can't buy on leverage. And so I'm sure that's the case with E-Trade as well. So in other words, in order to exercise the options contract, he does need more money. He could sell the option contract, option 2, scenario 2, on the open market. But since he's 75% of the open interest, I was concerned that it would be difficult, if not impossible, to find a counterparty. However, what we now know, if we pull up the options chain here, is that, oh, this was the shareholder meeting. So here's the options chain. What we now know is that the $20 strike calls, let's see, this is the 14th. We'll go to the 21st. The $20 strike calls here now have open interest of only 111,000 contracts. So that to me is what confirms. We went down from 160 to 111. So we lost 50,000 contracts yesterday. So I don't think there's any question that he sold some of these contracts. We don't know if he sold all the 50,000. Maybe he sold 40,000, 30,000. We don't know. We don't know. But clearly he had to have sold some because the total open interest no longer is in excess of 120,000. So he sold some. Okay, so now the question is, what did he do? Now he could have exercised, but what we saw on the volume yesterday was that there was a ton of selling. So people were looking at the actual order flow on that options contract, and there was selling. Big orders going through. Selling. And now the open interest has declined. It seems apparent that he did sell. Okay, so he sold. Now, it would feel like a really kind of weak move if he just sold to take profit, because the reason I say that is because we know that at one point, he was up on this position when it was at $27 a contract. He was up, the total value is 300 million. So selling it at $6 is $1 million up from his position, but that's like nothing compared to what it was. So then did he roll them? Because what I said here was that I thought reselling the contract would be hard, but he was able, as we can tell today from the volume yesterday and with the open interest today, he was able to sell some. So the price did drop while he was selling, and the price of GameStop dropped while he was selling, but he was able to sell some. But what if he could have just cashed them in, or he could have rolled them out, or not rolled them, but he essentially rolled them by taking a new position, roll options to the next expiration. But it doesn't even have to be the next expiration. So if we look at the strike price here for June 21st, I don't think there's any reason to sell the $20 strike and then go buy like the $25 strike or the $30 strike. Now, these both do have quite a lot of open interest, so it's possible he could have sold and just changed the strike price, but that feels kind of like, I don't know. I'm not sure what that would accomplish. So you could look a strike price out, June 28th, and then when I look at this, I'm looking for high open interest, right? And what you're seeing here is you don't have high open interest, 6,000, 4,000. So none of this really is looking like a roaring kitty kind of, I mean, you've got the 128, but that's too far away. So none of this feels like it's really lining up with he bought one of these strikes. They just don't have the volume, right? Or the open interest. Then you've got the June 14th, which is expiring literally tomorrow. And you do have volume on these at 25. You've got 19,000 of open interest, and we had volume yesterday. We actually had quite a lot of volume yesterday. I think on, what was it? On the $30 strike, let me just look. The $30 strike yesterday had 50,000 contracts of volume. 50,000 contracts of volume yesterday on the $30 strike. So that's a lot of volume there on the $30 strike. The $35 strike had 32,000 contracts of volume, even though open interest is only 15,000. The $40 strike had 30,000 contracts of volume as well. So you do have a lot of volume on some of these strike prices. Is it possible that he, like, this is like very YOLO? Like, would he have sold 20, would he have sold a bulk of his position and rolled it into an even shorter expiration that expires tomorrow in light of the shareholder meeting today, hoping that Ryan Cohen just delivers an epic keynote speech? Well, I don't know. To be honest, I love the sound of that, but you know what? That hurts me a little bit to think about, because this is the level of excitement that I had. When was it? Last week on Friday, when I was getting ready for Roaring Kitty's live stream. I was like, all right, here we go. He's gonna like give us all the reasons, the thesis, why this stock is gonna go higher, and then it kind of didn't happen. But I guess, there's a different perception from Roaring Kitty doing that than from the actual company doing that. The company's expected to speak, highly of themselves. And now they've got, they're going to talk, I have to imagine, about all this money they've raised. So there'll be a lot of people watching this. I will be watching it. I will have GameStop up. I'll have the options chain up while the call is going on. And we may see some fireworks, but this may also be a buy the rumor, sell the news type of event. And the thing is, we haven't gotten an update from Roaring Kitty about his position. So, of course, we've seen memes. I've got to refresh this. So we've seen memes. No surprise there. I guess this was this the latest? No, there was another one. Where'd it go? There it is. It's just had to play. Anyways, it's fine. So, so we've got some memes, but we haven't seen a position update. Now, if we saw a position update that said he's, it's gonna have to show something has happened here. So, is it gonna show a new position, rolling it out, different expiration, different strike? These are questions. We don't know the answer right now, but I think we can say, based on the options data, it's a reasonable conclusion that he has sold some of the calls based on the data. But while on the surface that could be bearish, and the stock initially reacted poorly to that, right? On the other hand, and the fourth scenario was to let the option contracts expire worthless, but that would be, that wouldn't be a good idea. So, okay, so yesterday the stock drops. It comes back down. So let's look at this for a second. It drops back down, and then, potentially premiums go down on the contracts, on the calls, and then he could scoop them up off the low. And then if he posts a P&L that he's got a new position and it's expiring tomorrow, we could squeeze. I mean, that's where we could see some serious volatility. But if we don't see that post, then, we're just left wondering, and we'll just be left to kind of trade the price action that comes during the shareholders meeting today. And maybe we'll see a YOLO update from Roaring Kitty tonight after the close. That's typically when he's been posting them, and it's been a few days, so I think we're due for one, and I'm looking forward to seeing what it looks like. But all right, so let me just I'll do an hour chart here. I don't normally do this time frame, but I'm just going to do it right here just to get a better picture of basically the price action over the last 2 weeks, right? So this is the price action over the last 2 weeks here. And so we had this kind of area right in here where 31.55, I just kind of snapped to the top of that line, but you see resistance, it tried to break, couldn't, came back down, tried to get above that, sort of right in here. So it feels like this is a level that has been a battle. 31. Now, $30 makes a little bit more sense because of the $30 strike price that we would see more of a battle at 30. We're going to see, I think we're going to see funds, big money defending that $30 price, trying to keep the stock above it, below it because of options expiring tomorrow and then next Friday. So 30 is a level to watch for sure. But if I draw ascending support, so that feels like we kind of have something in that area, right? I look at that, I see a bounce, a bounce, a bounce, 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 below it, above it, holding, and then back below it. So right now we're below this level. So this is something to keep an eye on. Below this area here, I don't know. I think that this isn't well enough established to have a lot of conviction in. I think we could flush through those levels. I don't think that's as obvious. But I think these are levels that are somewhat obvious. And then, of course, we've got the high of 67.50. We go back here. We've got the high of a little pivot of 72. And then we've got this high right up here of 80. So then on the daily chart, we have some other. So let's switch this to the daily real quick. So I'm going to switch to daily chart. So I'm going to stretch this out and we're going to look back in this 2021 area. Okay. So I'm going to grab this peak there approximately. We've got another one right here. And we've got another one right here. So those are daily levels right in this area. They're definitely, I mean, I'm going to make them a little bit brighter. They're definitely critical spots, critical lines in the sand on the daily chart. And then, of course, this one, I'm going to put it in like gold, all-time highs. So daily levels and then intraday levels right here. And I mean, the fact is, we're well off those levels. We would need some type of news catalyst to send us there. And I guess it's the perfect storm of a news catalyst plus, Roaring Kitty taking a position that gives traders a high degree of confidence and certainty over where we're going. But at this point, I would say definitely let's watch the shareholder meeting today. Let's see how it trades through it. As an active trader, I'm looking to capitalize on volatility. I'm not trying to do anything crazy, but I'll be watching that meeting. 38.60 is a level right here, 48, right? And then if we get above 48.50, then we're starting to move kind of back in the right direction up here. I think something that's important to keep in mind is how quickly last Thursday, when he scheduled his live stream, we went from literally $30 a share to 67. I know even for me it's easy to be like, listen, we're at $26 right now. We're not going back to 50, 60, 70. It's over. And that may be right. But we also did that kind of move in like 4 hours, 5 hours. Just last Thursday, a week ago today. And that was because he scheduled his live stream. So right now, there's a lot of unknowns. We don't know what he did with his position. It's pretty clear that he sold some of those contracts. Probably not. Definitely, I don't think all of them based on the open interest, but some of them he sold. Did he convert them, exercise them, turn them into stock? Did he roll them out? If he rolled them out, did he spread it across different strike prices? Was it expiration further out? Could have been, could be much more than just a week. We could be like, oh, well, let's look at, July or something like that. Right. So, they could have gotten rolled out, although you can see there's not really any volume further out there either. But they could have been spread across different expirations and different strike prices. Or did he go with a near-term expiration, like tomorrow, for a true YOLO trade, right? Buying some out-of-the-money calls, that starts to get really interesting as well. And then when you add on everything we talked about in yesterday's episode about naked short selling and the equity swaps, things do start to get pretty exciting here. So 8 a.m., top of the hour, I'm going to watch for breaking news on other stocks, see if I can get some day trades, build a little bit of a cushion for myself, and then we'll be back watching the board meeting or the shareholder meeting at 10 a.m. Central on GameStop. So thanks as always for those of you guys who have tuned in for this episode. I hope you hit that thumbs up. Hope you subscribe to the channel. And I'll remind you as always that trading is risky and GameStop is no exception. In fact, it's one of probably the riskiest trades you could be taking right now because the volatility is pricing in 20% plus per day. So we've got a lot of risk on it. Take it slow. Don't overstay your welcome. I'm not a YOLO trader. I'm just trying to capitalize on the volatility that happens each day. I'll see you guys back at it. I'm live streaming for Warrior Pro members, but for those on YouTube, I'll see you for the next upload real soon.